Live from America's heartland, this is the Daily Truth Report with your host, Noah Christopher.
Hey, all right. Welcome back to the Daily Truth Report. And Jim Bazzani is back with us. Jim, welcome back to you. Thanks for being here.
Thanks for having me on, Noah. Excited to be here.
Yeah, excellent. Well, we are live right now. It's a Monday night, about 7 o'clock, and we should be live on YouTube and Rumble and X. So if you're seeing this, give me a comment, give me a thumbs up. It helps out a lot, helps push this out to more people. So give us a comment. Let us know that you're seeing us okay, hearing us. Let us know where you're watching from, and then hit the like button if you would. That'll help us out. But we are live, and we'll take questions along the way. We've got a lot to talk about in crypto, and I was just telling Jim before we came on here, I said, we picked a great day to do this because the market is absolutely on fire today. Huge rally in Bitcoin and even huger rally in XRP, which always has my eyes. So, Jim, maybe we can just start by talking about the state of the market. We've had a tough couple of weeks, even maybe longer than that, but couple of red weeks, couple of down weeks. We basically went from 125,000 Bitcoin down to I think it touched into the 70s. So maybe I'll just turn it over to you. Any thoughts on that? I had heard, and I don't know if this has been confirmed, but heard that there was some big market maker out there that got in trouble and had to liquidate or was forced out. We've also heard a lot of rumors about JP Morgan Chase trying to liquidate Bitcoin and trying to go after Michael Saylor. All sorts of rumors swirling out there. What can you tell us that you've heard? Because you have much better research than I do.
Yeah, it is. It's always interesting. I mean, this space, there's always rumors. I did see the JP Morgan, Michael Saylor, micro strategy short position. I don't know too much about that and whether there's any truth behind that, but you are correct in the sense that, look, it has been a pretty tough month and a half. We've seen in the last 6 weeks about $1 trillion worth of market cap shaved off the cryptocurrency asset class, which is about 1/4 of the entire market cap. So it's been a pretty tough month and a half. As you said, Bitcoin's fell around 30% from its October peak. But this is more so, in my opinion, at least what we've seen, is more of a macro issue. And it isn't just a crypto problem. So look, November is on track to be the S&P 500's worst November since 2008. We can all remember what happened back then in 2008. But we're starting to see a bit of fear, a bit of uncertainty in the market. The fear and greed index is at extreme fear right now. And so when we start to see that uncertainty, not just in crypto, but at a broader market macro level, the first thing to go are what are perceived to be those risk on assets. And so crypto is usually those first assets that are oversold. We're seeing the ETF outflows are quite significant right now, whereas usually when we're in a positive expansionary market, we see a lot of inflows. So there's just a lot of fear and uncertainty currently in the moment with this space. But it doesn't mean that, the advancements that we've seen at a regulatory level, at a federal support level, even just the adoption through some of the largest businesses in the world, that doesn't mean that has been quelled. If anything, we're actually seeing a lot of positive indicators in the market, but certainly price isn't always reflective of adoption. It's certainly more of a psychological impact like we've seen in the past. So as you said, we've rebounded today, which is nice. Interestingly, it's not so much Bitcoin that's rebounded, but some of the larger altcoins like Ethereum, like you said, XRP as well. So I still think we are in a very volatile asset class, and sometimes we forget that when things are going well. But we've seen drawdowns like this in the past, and certainly also in bull markets of the past as well. So I still think there's a lot to be positive about. There are some interesting indicators heading into December, which we can touch on, that I think any crypto investor should be aware of. But it has no doubt been a bit of a choppy month and a half in the crypto space.
Oh, yeah, let's talk about those indicators in just a minute. But it's so funny. Human psychology is tough to overcome. But when things are going down, nobody wants to buy anything, and then when they're going up, that's when everybody wants to buy it. It's the reverse of what you should be doing. If you still believe in the underlying fundamental thesis, if you still believe Bitcoin, it has a future, and if you still believe XRP might even be better than that, and nothing has fundamentally changed about those. It's no different than, say you got there's a new coat at the store that you really like and it costs $500, and then one day you go in and they're having a sale and it's worth $250. Well, if you still like that coat, the better time to buy it is when it's $250, but nobody ever wants to do that. So it's just so funny to me. But we've been down 30%, like you said. And I can't give people financial advice, but as for me, this is a huge buying opportunity. And it's if you felt like maybe the train had left the station and you missed out when Bitcoin was going over 125,000, you're getting a great second bite at the apple here in the 80s, and XRP in the twos. I mean, this just looks amazing to me. The Ethereum under 3,000. Boy, I think that eventually goes to 10,000 like a magnet. I mean, what a great buying opportunity, in my opinion. So,
yeah, and I think that's sorry to cut you off, Noah, but I think that's also, again, just dependent on where you're at in the market, based on, and when I say we, as in like the individual investor. If you're someone that is already heavily overexposed to crypto, I can speak from personal experience as I am. You are still maybe looking at this as a buy, but you feel like you already have your large portfolio. If you're someone that's still relatively new to this space and you've been tracking the price performance, then no doubt, from a fundamental level, from an adoption level, not too much has really changed. So as Noah said, this is more of an opportunity now to probably get in at a better price. But it just is dependent on your risk profile. And as I said, what does your portfolio currently look like? Do you already have a large holding of, say, Bitcoin and XRP? Or were you looking for the right time to buy? And maybe this is a nice little dip in what is still hopefully an expansionary time within the market. Again, that's part of the assessment. And of course, there's no perfect science. But as Noah said, we've seen these drawdowns before, and usually the most sophisticated investors, when everyone's fearful, they're greedy. And when everyone's greedy, that's usually when they're fearful. So it's definitely an interesting time to assess your current portfolio and how does that reflect what we're currently seeing in the market.
Yeah, that's great. And well, let's talk about, I'd love to hear what you see, indicators or things coming up in December. I'd love to hear what you've got on your list. Let me give you a few that are on mine. And like we both just said, if you still believe in the fundamental thesis that crypto has a future, and I do, it's a great time to buy, at least for me. Everybody's different. But here's what I see when I look at things. This is easy right now. At least from my vantage point, being around since 2017 and not knowing if the government was going to ban crypto or send you to jail for holding it, or if it was just going to go to zero. Those are some hard times. Right now, man, I look around, it's not so hard right now. I mean, you've got the president of the United States, Donald Trump. He has made so many statements and executive orders saying crypto's here to stay. We're going to build a crypto strategic reserve. He's got his own crypto company, World Liberty Fi. His sons have a crypto company. He started his own stable coin. He's got Trump coin. I look around and I see the most powerful man in the world right now, and he's heavy crypto. I just don't see a world, and so is his family, by the way. I saw a stat today that the Trump family now has more assets in crypto than they do in real estate. And of course, real estate was their bread and butter for years. So I look at the president of the United States and his family being heavily invested in crypto. I just don't see a world in which the next 3 years he allows that to go down very much. I mean, I think he's going to pump his own bags, and I'm going to be there right along with him. So I see that. I see, the president and Congress don't agree on much, but I see the Congress passing crypto bills. They already passed the Genius stablecoin bill in December. Everyone believes they're going to pass the Market Structure Clarity Act, and then Trump's going to sign that. So we got legislation making crypto mainstream going through Congress. We've got rate cuts almost certainly happening in December or some point thereafter. We probably got the money printer coming back on and sending asset prices higher. Everywhere I look, I see positive catalysts. So what do you think? And maybe I'm sure I left out a bunch. What do you see coming, Jim?
Oh, well, no, I think you stole my thunder. You covered off, I think, what is some really important macro impacts. So as you said, we've got on the 10th of December, the Fed will meet again to determine whether they'll cut interest rates. Now, if you'd said 6 weeks ago that was almost a certainty to occur, it's a little less uncertain. It's a little less certain now, sorry, just with what's happening in the broader macroeconomic landscape. So I think that is also sparking it, because as you said, if we get interest rate cuts, that will lead to further liquidity in the market. I think there's a level of concern that, well, maybe they won't reduce interest rates. And that was something that was considered to be a foregone conclusion. So that is something that we'll definitely look out for. As you mentioned as well, look, I'm of the perspective that the US government is now going to be shifting its policy view from quantitative tightening to quantitative easing, which means they want more liquidity to come in the market. They want this economy to continue to be expansionary. As you said, I don't think Trump views us going into a recession as an option. So he'll certainly be looking to do everything he can to increase that liquidity coming into the market, which is historically very bullish for crypto. So there are two indicators that I think are really important. I think looking at it broadly, and some of the maybe more of a crypto indicator, is what we've seen on chain is that a lot of Bitcoin OG holders have been selling. And I'm talking about people that were buying Bitcoin back in 2011 for $10. A lot of these whales, which we love to call them, have actually been selling out of their positions. And it's really due to that psychological impact of hitting 100K. A lot of them would have had that as a price target in their minds. And then when it hit 100K, over the last 6 months, we've seen a lot of them sell out of their positions. And we're talking people at size. That's forced a lot of sell pressure into Bitcoin, which has then flowed into other assets. So that's an on-chain metric that is actually starting to slow down. It's one that was at all-time highs not too long ago. So if that continues to reduce, and ultimately, I think a long-term, these are Bitcoin maxis, right? So I think they'll actually be net buyers of Bitcoin again. But at this stage, if that can slow down, that'll actually reduce the sell pressure. If we can get stability in the economy, one of the biggest things right now is this an AI bubble? Why are these tech stocks continually still hitting all-time highs? Is this something to be nervous about? And ultimately, at this stage, a lot of the people in the market are nervous about it. So we need to ensure that there is a stability angle from a share market perspective, because that does ultimately flow into crypto. So there are a few events. As you said, I think the Genius Act is one that will be really important from a regulatory and legislative standpoint. It'll give more assurance for the largest businesses in the world to start holding Bitcoin and other cryptos on their balance sheet, and to really incorporate stable coins into their day-to-day operations. So I think there are a couple. There's certainly more that we could probably lean in on, but I think they're the major ones.
Yeah, and like you said earlier, just the fact that we're down 30%. The fear and greed index is at extreme fear. Those things just don't tend to stay that way for very long. So, when we've been at these extreme levels and been at them for quite a while, that rubber band I think, has to bounce back at some point.
Yeah, absolutely. And look, part of the fear and greed index, and something that is a great product or byproduct of crypto, but also not great in the downward trend, is that we've had so many liquidations, right? I know we spoke last time about the mass event in October, where I think it was about 18 billion in liquidations that were forced. Mm-hmm. Ultimately, what that results in is a cascading sell effect. And that induces further fear, right? People see prices drop significantly. At the time, maybe they're not aware that it's due to the fact that there is so much leverage in the market, and they think that maybe there's actually something wrong with the crypto space, or I don't know, as you said, back in the day, it was the fear that the government would just shut it down. There are a lot of investors in this market that maybe aren't as sophisticated as Callum Brown clients or URI, that see the price go down and then decide to sell themselves. And that induces further fear into the market. So we are just at a level of uncertainty due to the fact that we have had a lot of liquidations, which has forced or resulted in a lot of people selling out of their portfolios, when really nothing has changed in relation to the assets they're holding from a utility perspective or product market fit perspective.
Yeah. I don't know if you have any stats on this, or if you just have a ballpark, but I have to believe that the people that own crypto, we're still probably a pretty small number of the general public. I don't know if it's 5% of people own crypto, 10%, 50. I mean, I still think it's probably pretty small. I bet a lot of, especially older people don't have any crypto. And eventually I think all those people are coming in. So do you have any market research on that, or anything off the top of your head? Do you know what percentage of the general public even owns crypto right now?
Yeah, I remember doing some analysis on this a while ago. I only know it from an Australian perspective, so probably not too relevant for our US viewers, but I know that in Australia it was around, I think we had about 26% or 28% of people in Australia actually have owned crypto at one point, which I want to stress is very, very high. We weirdly, I mean, maybe not weirdly, but we have one of the highest adoption rates in the world. I know the US is, I think it's a little bit less than that, but factor in that the US is 100 times the population that we have in Australia. So I know that the Australian adoption rate is around there, which is very high. But certainly, I mean, I was speaking to a client the other day. The only exercise you really need to do is to go into your local store and ask someone, have you heard of XRP before? Or what's the price of Bitcoin? And often they'll say, oh, a couple $1,000 maybe. So in terms of mass adoption, I mean, we're nowhere near the levels that I anticipate will be 5 years from now, 10 years from now. And part of that is due to the fact that we haven't had the regulatory environment to actually support crypto, to push it forward at a federal level. And as you mentioned, look, we've only really had that now for 10, 11 months. Before Trump, there was, in fact, it was the other way. It was an anti-crypto rhetoric. So we're still very early days in actually having support at a federal level. And we've had so many advancements this year alone. Unfortunately, it's just one of those things where those advancements don't necessarily always equate to a positive price. But certainly, before this massive drawdown in the last year and a half, it had been a really positive year in crypto. But we've seen a lot happen within sort of the last, not year and a half, the last month and a half that has impacted the overall market cap of crypto.
Yeah, that's so true. And I had a family member call me recently, reach out and send a message and say, yeah, kind of in a snotty way, like, oh, how's that crypto doing for you? Over after Bitcoin's down 30%, and it's stuff like that that just tells me we're still so early, because these people, they're mad they didn't get in, they're not invested, they know they missed it, and really they can still get in now. A great opportunity, but I get a message like that, and they're, how's your crypto? My crypto's great, man. I was buying Bitcoin at 3,000 and it's 88 right now. I was buying XRP at 19 cents and it's still 225. My crypto's awesome. How's yours?
I was going to say no. You should send them a graph of the price performance since 2017. It's literally the best asset Bitcoin is that you could have held since then.
Absolutely.
Out of all assets. So yeah, I mean, I know that you guys have Thanksgiving coming up, and certainly we have Christmas to look forward to pretty soon for those that celebrate it. And I know that those conversations are always rampant at those family gatherings. Hopefully, we can see some positive price action before Christmas, and we'll have something to show for it. But yeah, as you said, look, I think there's also just a lot of misconception around what actually is this asset class, and one thing it is, unfortunately, still at this stage, is it's still volatile. And that means we get a lot of benefits with volatility when things are performing well, but it also means we need the word of the storm when we have negative times in this market. It can go up really quickly, it can go down really quickly as well. And so as long as investors are aware of that and understand what they're holding, that's usually half the battle.
Yeah. Well, that is half the battle, and in fact, let's talk about your company a little bit, Jim. You're with Caleb and Brown, and I've been so happy to be partnered up with you guys for, I don't know, probably close to 6 months at this point. A tremendous company, but safety, and safety in crypto can mean so many different things. But the reason I reached out to you guys and wanted to partner up was because I've been watching you since 2017, and you've done everything extremely deliberate, very safe. Everything is double and triple checked. And so, in fact, let me throw up on the screen here and I'll show people what I'm talking about. I created you can scan that QR code that's on the screen. I'm going to take that off though for a minute. And you can go to safewithnoah.com, and I'm going to take you to show you what that page looks like. And then I got a few questions I want to go through, Jim, if you don't mind, but that's going to take you right to this page. You're going to see my name at the top, and you're going to see Caleb and Brown. That's a custom page to let you know you're in the right spot. If you are not in crypto right now, or if you're on some exchanges but you don't feel comfortable with them, or you got your crypto on your phone and you've never felt comfortable with that, I would really encourage you to check out Caleb and Brown. Jim, maybe I'll turn it over to you really quick. Can you give a 60-second summary of what makes Caleb and Brown different from, like a Coinbase or just, having a wallet on my phone? People can do that, or they have these things called, ledgers or Nano Ledger or Trezor or any of these things. There's a lot of options for how you want to store your crypto, and positives and negatives with all of them, right? I mean, there's no it's just personal preference, but I love the way you guys do it. Maybe just tell me 60 seconds. Are you a brokerage? Are you an exchange? Are you a broker? What do you guys do?
Yeah, so the best way to think about it, I'll try and keep this short, is that we are a brokerage. So very similar to how you would have known in the past about how a stockbroker works. We provide a personalized white glove service that doesn't really exist in crypto. So if you've used an exchange, you can buy, sell, and swap crypto. You can do the same with us. But if you do that on an exchange, there's no one to really speak to about your portfolio. There's no support if you have an issue. There's no one to really get some guidance around what does my portfolio look like compared to the market norm. Should I set up exit strategies? What should they look like? So we do all of that. So we work really closely hand in hand with clients. We're about building long-term relationships. So every client that works with us gets their own dedicated broker. That broker is an expert in the crypto space, and they're there to assist you throughout your crypto journey. So they'll hold your hand. They'll help you buy, sell, swap. They'll provide you as much guidance as you need. Now, there's all parts and elements of our service that entails. So we can talk about how we do custody. Obviously, that's a really big component around safety and wealth preservation. How we source liquidity is different. We essentially just provide an institutional-like service, but we try and make it accessible to all, because we know that in this space, having that optionality is really important, but having best in market liquidity, custody are really important things for most investors. So we make that accessible to all, and not just the high net worth institutional grade businesses that get that benefit. We want it to be accessible to the everyday Joe like myself, who was wishing and wanting a service like this back in the day.
Yeah, I love it. And I know so many people listening to me love it, because, we're closing in on about 1,000 people that have opened an account over there since you and I first started working together. And it is that's exactly the way I would describe it. It's just like you always used to have with your stockbroker, where you could call somebody up or you could send them an email. You're talking to the same person every time. They're your personal dedicated broker. It's white glove concierge service. If they're not available, someone else will take your call. You're never put on hold or put on delay. So I love that. You said something about liquidity and sourcing liquidity. I'd love to hear more about that, because I've been in crypto a long time, and sometimes you get these coins that don't have good liquidity, and that if people haven't experienced that before, they don't know what that word means. You can't get good prices. You can't. The quote on your phone says it's the price for this crypto is whatever it is, but you try and buy it or sell it at that price, you can't really get it. You end up paying a lot more or selling for a lot lower. Talk about liquidity, and talk about how you guys source liquidity. What does that mean?
Yeah, so source and liquidity is essentially just if you go on an exchange and you try and buy something, they need a source. Say you're buying XRP, they need to source that XRP from somewhere. Now, most exchanges are market makers. And what I mean by that is that they source and have their own liquidity pool. And so they can essentially, based on how much liquidity is in that, they dictate the price you can buy something at and the price you can sell that at. Now, usually there's a difference between the two, because they'll charge a spread. But being a market maker is great for a lot of reasons. They can dictate the liquidity for the assets that they sell to clients like us. But what that ultimately means is also that they can potentially be a single point of failure if it's a less liquid asset. Now, naturally, if we're talking about the Bitcoins of the world, there's enough liquidity in the market for those. But if we're looking at altcoins that a lot of our investors, I know that a lot of investors on Coinbase want to buy, that's where you can start to see a difference in what you can actually buy just based on what they currently hold themselves. So we aren't a market maker at Caleb Brown. We are essentially aggregating our liquidity from a whole range of different sources. So we use a whole range of different OTC desks, partnerships with desks we've had for multiple years. We'll pull our liquidity from a range of different liquidity pools and decentralized exchanges, and also sometimes centralized exchanges. And what that ultimately means is that we can get you the best price, because we're not just pulling it from one source. We'll actually go to market and pull through the best price that we can get based on a range of different sources. So that gives a lot of benefit for our clients, especially those that are buying at size with some of these less liquid assets. Whereas if you were to do that on some of these other platforms, you maybe incur slippage, which is essentially a reduction in the price because you're looking to buy into something that's larger than what they currently source, or you're selling a larger position that they don't have enough buyers for, which ultimately will reduce the price in the long run. So as I said, we pull out liquidity from a range of different avenues, which ultimately means that you get peace of mind as a client, that we're getting you the best price that we can find in the market at any time, both for when you buy at size and also when you look to sell at size as well.
Yeah, that is so important. And if you've never experienced that before, maybe you don't understand, but just trust me when I tell you, it makes a huge difference when you're buying and selling, getting that liquidity and getting that good price. Jim, what about, I've got at the top of my screen here, institutional grade crypto custody. Can you explain a little bit about the way you custody crypto for people? What does it mean? What security measures do you have in place? And then maybe how are you a little different from some other places that maybe don't store crypto one for one, or if there's a big run on an exchange or something? Because I know you guys are very different in that regard. Walk me through that.
Yeah, I mean, look, we have a lot of people in this business that work just on the operations and custody side of what we do. And we just found, look, we've been around since 2016. So naturally, we've just matured as a business from, 3 people up to, 70 plus today. But custody is one of those important elements of crypto that a lot of people either don't have enough education on or they take for granted. And I'm not bad mouthing anyone because I've been in this space since 2017 and I made the mistake of holding some of my crypto on an exchange. Unfortunately, that was FTX. And when that went under, I had to go through a creditor claim process. So I think the educational side of custody is really important. And so as a business over the years, we've worked with partners, and I'll touch on who they are in 5 blocks in a second, but worked with them to ensure that we're providing an institutional grade custody solution for those clients that require it. We always encourage our clients to set up their own hardware wallets and practice self-custody when it makes sense for them to do so. But we've just found over the years, especially some of our high net worth clients, they don't really want to deal with the stress of being their own bank, which is essentially what you become when you set up your own hardware wallet. And they wanted to store it with a trusted service like us. And so through the years, we've developed a very comprehensive, and as you mentioned, a very security protocol intensive custody solution. And that's through a partnership with 5 blocks. So 5 blocks are the preeminent custody solution provider in the crypto space. They work with the largest banks and institutions around the world. And so we've been in partnership with them for about 4 or 5 years and have developed a custody solution with them that we offer for clients. And what that ultimately means is if you want to hold your crypto assets with Caleb Brown, those assets are held in cold storage on a 1-for-1 basis. So we aren't doing anything where we're trading your assets out in the market and trying to earn a yield on them or recirculating them or moving them around. Your assets just sit in cold storage, but ultimately they're readily withdrawable at all times on a 1-for-1 basis. So there won't be limits imposed. Those assets are readily available whenever you need. And that gives our clients peace of mind that A, their assets are protected when they hold them with Caleb Brown, but B, they're actually readily accessible and ready to go whenever they need. So unfortunately, that's something that is not necessarily the case with a lot of other platforms and businesses in this space. So it is something to be aware of if you are storing your assets on another platform. But safety and custody is our number one priority. And we think that assets should be held in cold storage, not in a hot wallet, which we've seen time and time again on some of these exchanges. They don't really practice that cold storage element with how they custody. Ultimately, if you hold assets on that platform, it means that they're probably operating more like a bank where if I'm holding XRP with them, they're actually using that XRP to send it out elsewhere or to earn a yield or what have you. Again, maybe they've changed, but I know that that's what FTX was doing. And we've seen in the past with some other platforms as well. So it's just an added layer of security that we provide. And I can go into the details of how we do things like withdrawals if you'd like. But we place a lot of emphasis and focus on that, both from back of house in terms of how operations operate, but also more importantly, how our brokers actually facilitate those withdrawals. So calling clients to verify it's them, going through the relevant security protocols and procedures. We do all of that as a business.
Yeah, well, you said a couple really important things in there that jumped out to me. One was how a lot of these exchanges will impose limits on you, and yeah, I've certainly seen that on many different accounts I have. I won't name names, but some of the big exchanges in the U.S. market, crypto exchanges, and you go in there and they'll say, well, your limit today for buying or your limit today for selling is this, and you say, well, what do you mean I have a limit? Why? And when you dig down to the why, it's because they might not have all of those assets ready to go right now, and if you and 1,000 other people all wanted to do massive transactions, that could create the equivalent of a bank run in crypto because the assets aren't there. So that's very scary. If you're on any exchange that something pops up on your screen that says there's a limit, I would be very concerned about that. Just me personally, because that tells me that maybe everything is not there. But with you guys, what I love is those assets are in an account, one for one. If I own 100 XRP, there's 100 XRP earmarked for me sitting in an account with you guys. It's not being lent out. It's not being hypothecated. It's not being anything else. You're not trying to make interest on it. It's just sitting there with Fireblocks in an institutional grade custody account. And that's really, really important to me. And that the other thing you said was, when you went through when FTX went under, you were treated as a creditor. They weren't holding your funds. You were just a creditor, and that's a really scary position to be in. I want to know my funds are just being held there in my name for my benefit, not that I'm just a general creditor of the company. That's terrible.
Absolutely. Yeah. And the other component of that is you talked about limits. Part of the reason they have limits is, as you said, the liquidity isn't necessarily readily available because they're using your assets to earn a yield elsewhere. Part of our custody solutions that, look, we don't charge for it. There's no custody there's no custody fee for our solution. And so that ultimately means we're not incentivized to hold client assets on their behalf. It's not like we're earning revenue to custody for you. So when you're ready to withdraw, we can process that withdrawal as long as we go through the security steps to verify that it's actually you. And so that means our incentives are aligned. We're not going to hold onto your assets if you want them, because we're not getting paid to hold onto them. So that's a bit of a unique situation where often other platforms will charge some sort of custody fee. And that's where they're actually incentivized to keep your assets on there. So what do? They make it as tricky as possible. The other component that you mentioned is around, well, I'm holding my assets with Callum Brown, but do I actually own those assets, or am I accredited to Callum Brown? With us, and again, I don't know if this is the case with, and I hate bad mouthing or whatever I'm saying about other exchanges, because they do have a great role in the crypto ecosystem. But with Caleb & Brown, you are the beneficial owner of your assets. So how it legally works is that we hold those assets on trust on behalf of the client, but we're not the beneficial owner of them. The client is the beneficial owner of those assets. So if something was to happen to Caleb & Brown and we had to go through a creditor claim process, creditors could not claim those assets because they're not company assets. They're client assets. So the first thing that we would have to do in a bankruptcy situation is actually return client assets to their rightful owners. So I wanted to stress that, because as you rightfully said, with the FTX situation, even though they were my assets that were on their platform, technically I didn't own them from a legal standpoint.
Yeah, that I can't stress how important that is. And it's never a problem until it's a problem. But
Exactly, yeah.
So I want everybody to really understand that. So important. And my number one goal in doing this show and running our website and everything that we do is kind of like the physician's oath. First, do no harm. So if I'm going to tell somebody about a product or a service or someone new that I've partnered up with, I want to make sure they're rock solid. And that's why I probably waited too long. I should have done this sooner, but I waited and I watched you guys for about 7 or 8 years. And I just saw you doing everything right and no issues. And so have a high level of confidence. And then listening to the way you explain this and how you're different from these other exchanges, so important. And if I'm talking about it and telling people, go check this out, I want people to be really safe, and I do have that confidence level with you. That's why I put it in the name of the website. It's safewithnoah.com, and then that takes you to what you're seeing on the screen here. So very important there. Maybe Jim, we can just end with you just mentioned it, but your fee structure. you might imagine, well, it's very complicated. We got a fee for the custody, then we got a fee for talking to the broker, and we got a fee for trading, and then we got slippage, and then we got all this stuff. That's what people might expect, but you guys have one fee, and I'll let you explain it. But no hidden fees, no fees to talk to your broker, no fees for the custody, which in itself is a massive benefit and service that is just provided along with this included. That other people pay a lot of money for institutional grade custody, but you guys have one fee. You want to explain that to everybody so they know what to expect?
Yeah, so it's for both, as you said, the complexity reason, but more importantly for us, it's a transparency thing. And it's something that we've always had as a business is we want to be as transparent as possible with our clients around how much they're being charged, but also who we are as a business and what we value. So I'll touch on the fee structure in a second, but that speaks towards, if you go on our website, you can literally see, so there's a section on here that will say meet the team. You can look at everyone that works in our business, from our CEO all the way down to our support staff. So we think that's really important. And we think that transparency, unfortunately, is not really one of those things you get in crypto. So I think that is the first thing. We are a transparent business, and that is in everything that we do, including our fee structure. So as Noah said, we charge one flat fee, and that's just on the execution of a trade. So a buy, sell, or swap, we charge a 3.5% fee. And that's the only fee that you'll ever be charged. So there's no custody fee, there's no hidden costs. And so this is something that I just want to emphasize, that a lot of other exchanges, in fact, most exchanges will charge a really small transaction fee. And sometimes a lot of our clients are really confused as to, well, why is your transaction fee 3.5%, but on an exchange, it's, maybe as low as 0.5%. Well, the difference is that exchanges don't make any of their money from the transaction fee. They make most of their money from what we call the hidden costs. So slippage, but even more importantly, spread. The difference between the price that you buy something at, the price you sell something at, that is how they make most of their money. Whereas we won't charge you for that. So we won't charge you any of those hidden costs that aren't actually transparent and can be seen on those exchanges. And we won't charge you for things, as you said, like withdrawals. There's no withdrawal limits. So think of the 3.5% as an all-encompassing fee of the entire brokerage service that we provide. And often at times, that 3.5% fee is actually less than just the spread fee alone that a lot of these exchanges charge. So we always tell clients or people that are interested in our service to actually go through that exercise, get up a tab of an asset that you want to buy in an exchange, look at what the price is, then open up an identical tab to sell and see what the difference in between those two prices is. And often at times, especially in periods of high demand, that's usually higher than that 3.5% fee. So we are transparent. It's 3.5%. You'll see exactly what the fee is when you go to make a trade. And that's just part of what we do. And it's part of our overall service, is what you're getting with that 3.5%.
Yeah, that's right. And I have actually gone through, I would challenge anybody to do this. I've actually gone through on Coinbase and Uphold, and, good companies, but the transparency is exactly the way you're describing it. They'll say, "Oh, we've just got a really low fee," but I have sat down and done this. I've done the math. I've done like a hypothetical, transaction. I want to buy, 50,000 XRP or whatever, just to kind of put it in big numbers, and then you can go to the preview screen, and it'll show you, okay, you're going to get this many, or you're going to sell this many. And if you look at between the slippage, between the spread on the prices they're giving you, and then I compared it to what I could get on the Caleb and Brown platform with no slippage and your prices much better on the buy and sell side. It was almost I did several different transactions. I did Bitcoin, Ethereum, XRP. It was almost always right around 3.5%, sometimes even more. So the pricing is right there, and like you said, it's transparent instead of being hidden and everything else. One other thing that I think you've spoken about before, but maybe you can just address here, that is your fee, and that's just the way it works. But for high net worth people, or people doing, really big transactions, maybe people that have been buying for a long time and at some point, maybe have a big amount to sell. And certainly if it's in the more liquid coins like Bitcoin, Ethereum, XRP, I don't want to make promises for you or the company, but is there some room to talk? And this is the benefit of having a broker. I think there's some room to talk to your broker and say, look, I want to do a really big transaction. I'd rather do it with you guys. can we talk about the fee and negotiate that a little bit?
Yeah, of course. And that's something that, as you said, is negotiable with your broker. Ultimately, we're not in the business of gouging our clients for ridiculous fees. If you're someone that is trading at larger volumes, or you've worked with us for a really long period of time, we're about relationship management. As I said at the start, we've built really long-term relationships with our clients, and we want to make sure that they're well looked after in all aspects of our service, including the fee structure. So 3.5% is our default fee. That's what we start at. But again, we know that every single investor is different in terms of what they're trading and at what size. So they're the negotiations and discussions you can have with your broker. And ultimately, we are flexible as long as it makes sense, right? And it is also dependent on the actual assets that you're buying as well. It's not as feasible to reduce rates if it's a really illiquid asset or an altcoin is harder for us to source, just simply because of the difficulty of obtaining it in the market. So absolutely, look, nothing's set in stone with us, and that's in relation to how we work with our clients on a daily basis. We want to work with our clients for the long term, not just for the next 6 months. We have clients that have been with us for nearly 10 years now. So that's all encompassing of the personalized service that we offer.
Yeah, that's great. And my exit strategy is going to be with you guys. Since 2017, I've bought crypto at all sorts of different places, and I've had it spread around. But I am slowly and surely getting it all moved over to Caleb and Brown. It's going to sit there. I sleep better at night, and then when I go to eventually sell out at some point in the future, we're going to do some big transactions, and I'm going to do them with you guys. And I'm going to call my broker and say, it's go time. So I love that. I love the idea of getting to talk to a broker. And, since 2017, I've been doing it solo, and it's so nice to have your company around where you can talk to somebody. I've said this in prior shows, Jim, but I would really encourage anybody listening to this, if you're new to crypto, or maybe you've been around for a while and you're like me, that once you hear about this, you want to get your stuff out of the other places and into a place where you can have it safe, institutional custody, and talk to a broker. I really encourage anybody, just go open an account. Go to that link. It's at the top of the screen, or you can scan that QR code, safewithnoah.com. It's going to take you to the page I just had up on the screen. But get the account open now. On days like today, when we see XRPs up 10%, by the time things are getting exciting, you don't want to still be having to figure out how to, I got to open the account. I got to verify my identity. Now I got to link my bank account. Now I got to do all this stuff. Get that, even if you don't plan on buying or selling anything right now, get that done now. Get the account open. It's free. And even have a first call with your broker. That's free too. Talk to them, find out what it's like. Have an initial chat. They're going to start to build a file on you. They're going to open up in a good way, not like CIA file, but they're going to build a file, and they're going to get to know you. They're going to know what your preference is. They're going to know, are you a total newbie, or are you very experienced and you want to talk advanced strategies, or do you just need help figuring out what to do? They're going to write all that down. They're going to write down your preferences. Do you like to talk by phone or by email? Do you like to place your own trades, or do you like the broker to place your trades? So I would encourage everybody, get that started right now. I think we're coming into a really exciting time for crypto. I think there's still time right now. I think this has been an absolute gift, coming from 125,000 Bitcoin down to 80, XRP, 350 down to 2. What an awesome gift to get in if you're not in, or to grab some more if that's what you want to do. That's what I'm doing. I'm not telling you that's what you should do, but I am telling you that take advantage of the free account and the free conversations with the broker. It's Jim, it's such a personalized service that you do. And you said you've grown from 3 employees to 70. But with the growth your company's experiencing, at some point, either you're going to have to keep hiring more people, or, sometimes what companies do is they say, hey, we got to shut down new accounts for a while to make sure that we service our existing clients well. We can't let that service quality fall. So I've certainly seen that happen in crypto, and just out of crypto too, just regular companies that say, hey, our priority is to our existing clients. So I don't know if you have thoughts on that, but I just think it's a no-brainer. Get the account opened up right now and just get your foot in the door.
Yeah, I think, as you said, it's a no-brainer. It's always really valuable to have options in crypto. especially because we have seen, as I said in the past, other businesses have gone under, or maybe they have downtime. So it's always really valuable to have different options in terms of being able to on-ramp, off-ramp, and execute trades. Certainly with us, you get that assurance of an actual person to speak to, which is quite rare, and someone you can actually build a proper working relationship with over a really long period of time. So as Noah said, it's completely free to make an account and get started and even speak to a broker and just understand what the service is all about. So we always recommend to at least go through that. Now there's an initial sign up form and then a verification after that. But once you're done, you'll get an assigned a broker. They'll reach out and introduce themselves. And we always recommend trying to set up a consultation call with them. But certainly there's no hurt in getting started. And as Noah said, in periods of further demand, it takes a little longer for us to onboard clients. So you want to get that done when the market is a little choppy like now. I think it's always a great time to get started. So you're ready to go when you're ready to go.
All right. Our guest today has been Jim Bazzani with Caleb and Brown. Jim, always love having you on the show, talking about the markets, talking about what you guys do over there. It's so great. I have such a high confidence level in sending people over and knowing they're going to be taken care of. So thanks for what you guys do. Everybody at your company, thanks for being on the show. Everybody, thanks for joining us. And we will catch you on the next one. Bye, everybody.
Bye.